It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to the Real Estate Breakfast, helping Aussies just like you understand the property market one episode at a time with our weekly conversations and talking to the biggest names in real estate with analysis, trends and predictions. And if you would like to contact us, our email address as always is myrealestatepodcast@gmail.com. It is a Friday morning. Looking forward to another weekend coming up. It is March the 20th. And what is going to happen with this Iran war? Well, this is sobering. Rob McNally, a former White House energy advisor, had this to say on 60 Minutes.
I'm predicting this is going to get worse before it gets better. This is going to be a longer and costlier conflict than just about everybody expected.
You have said that a prolonged closure of the Strait of Hormuz is a guaranteed global recession. Do you still stand by that?
Look, yes, the world economy cannot grow without 20% of its energy supply, period.
Rarely do we recognize history in the making, but is that what we are witnessing right now? We're sitting in the middle of an unprecedented time.
Yes, we are experiencing, just as a factual matter, the biggest energy disruption in history. We have to just hope and pray that it doesn't go on for too much longer.
Yeah, that doesn't sound good at all, and it just goes to show just how tenuous the energy supply is around the world. Now, if you're an Australian homeowner, this has come in from Domain's profit and loss report that has just dropped. Around 97.5% of house resales and 88.3% of unit resales are turning a profit. And get this, the median resale profit now stands at about $440,000 for houses and $228,000 for units. And off the back of that, let's take you to Sydney and catch up with Nicola Powell, the Chief of Research and Economics at Domain. Welcome to you on this Friday morning to the Real Estate Breakfast. And yeah, according to that report of yours, plenty of decent money being made around the country from these resales.
Good morning. Look, it's a significant amount of wealth really being generated by Australians' housing market. When you look at not only the vast majority of sellers are making a profit, it's actually just how large those gains really have become. And, it does reflect the years of price growth that we've seen, constrained levels of supply and strong demand. But also it is a reflection of we're actually staying put in our homes for longer. So it means that you're reaping the benefits of multiple property price cycles, which is why we've got that record profit for houses on the national level, as you mentioned, $440,000.
Yeah, let's go around the country and check in on Brisbane and Perth. Now, they're leading the current wave of housing wealth creation. Both cities recorded 99.5% of house resales at a profit, meaning almost every seller walked away ahead.
Absolutely. And I think it really is the story where we've seen Brisbane and Perth see extreme rates of price growth. We know that they've been the nation's property leader. And what it reflects is, people who are selling their homes now are benefiting from that strong rate of price growth. As you mentioned, that's the vast majority of sales actually recording a profit. And what we've got when you look at Brisbane, the resale for houses, that median profit was $580,000. Now, that's the median. So that means that there are some sellers walking away with significantly more than that 580.
And let's have a look at Sydney, because Sydney continues to dominate when it comes to sheer scale. Of course, it's going to do that with the highest median resale profit in the country, $750,000. And then sort of going back to your point, that is just the median. So there is vast amount of selling power in that upper echelon.
Sydney really does dominate the nation in terms of its equity depth, and that's really illustrated by the $750,000, which is the median profit for houses in Sydney. It's the highest nationally. When you look at the proportion of homes being resold for a profit, it isn't the nation's leader, but we still have a large pool of homes being sold at a profit, 97.9%. But this is where it becomes really eye-watering. We've got prestige markets like the north of the eastern suburbs that recorded a median profit of $2.77 million. So a significant dollar gain for people that own and have sold in the eastern suburbs.
Yes, that is a massive number. Adelaide tells us a different story with your report, one of consistency. Its record median profit is hovering around that 539,000 mark. It is reflecting steady, reliable growth and broad equity gains built over several years because it has been that darling spot in the country.
It absolutely has, and it really does reflect that price growth that we've seen. It's almost been an unstoppable market when you compare it now back to 2020. Adelaide is among the nation's strongest performers. We've got about 98% of houses being resold for a profit and almost 97% of units being resold for a profit. It really shows that consistency has translated into strength. We've seen steady multi-year growth, and that's been realised at point of resale for homeowners. And, you know, when you look at some of the areas that have got the highest proportion of homes being resold at a profit, there are some that are really close to 100%. So 99.5% in Okaparinga. Hopefully I've said that correctly. And at Adelaide Hill is at almost 99%.
Yeah, and meantime, conditions are easing slightly. If you look at Melbourne, Canberra, Hobart and Darwin in your report, profit levels remain high, but momentum really has softened.
I think it really reflects what we've seen in Melbourne and Canberra's housing market, where they have seen softer rates of price growth in recent years. They were the markets that really struggled to move into an established recovery. And while we have recorded, particularly after at the last half of 2025, we have recorded growth. But what we've got is, when you look at the proportion of homes being resold at a profit, it's just under 96%. Where we've got many other markets at record profit margins, it's not the case in Melbourne. It's still a healthy profit at $390,000 for Melbourne houses. It really reflects the cooler price momentum that we've seen overall in markets like Melbourne.
We are talking to Nicola Powell on our Friday morning. When we come back, we're going to get more into the numbers for these unit resales. We'll do that next.
Every week, unravel the real estate market to help guide your real estate journey. Know Your Property. Available for breakfast from 6 a.m.
It is a Real Estate Friday, and yes, let's have a look at those unit resales that are still performing strongly. Nationally, here's a number: 88.3% of unit sales delivered a profit with a median of 228,000, as we've mentioned. Nicola is with me. Brisbane is rewriting the unit market story firmly, shifting into this wealth creation phase. Just talk to that in terms of those units in the Brisbane property market.
Brisbane has seen an extraordinary period for its unit market performance. I mean, rewind, 5 years ago, it wasn't that long ago really that Brisbane was in an oversupply of units. That is not the case today. And this is really being reflected in strong rates of price growth, but also the performance of units upon resale. We found 99.1% of units being resold were at a profit. So the vast majority of sellers are reaping the benefits of price growth. And that median profit for Brisbane sits at $325,000. So not only is Brisbane leading the nation in terms of the proportion of units being resold at a profit, it is also leading the nation in terms of profit margin as well, which means it does surpass Sydney in terms of those dollar gains. And when you look at the median profit, which is $325,000 today, that is almost 53% higher than what that dollar profit was this time last year. So extraordinary change in value.
Yeah, those are big numbers. Continuing on, looking at the units, Perth and Adelaide, they're seeing similar trends. Both recorded record median unit profits. In Perth, 226,000 and 290,000 in Adelaide, alongside very high shares of profitable resales. Once again, that is going pretty well in the unit market.
Absolutely. I think Perth and Adelaide really shows that sellers are crystallising their gains, really reflecting the strength of these markets that we've seen. You tend to find that units don't see as much capital growth as what we see for houses, because it's the dynamic that is actually the land component that sees greater rates of growth over time. In some of these unit markets, we've got Brisbane, Adelaide, Perth. These are three cities that are really reshaping the unit narrative. You know, they're leading the way, they're presenting and providing lots of profit upon resale, really just illustrative of the strong gains that we've seen in some of these markets in the unit sector.
Yeah, gone are the days of, it's a unit, it's an easy way for us to get into the market, especially looking at the Sydney property market and units in particular. That is solid, that is growing at around 87% of resales are profitable, with that median gain of over 216 grand.
I mean, this is the interesting thing with Sydney's market. You know, we have seen a strong overperformance of houses compared to units, and that has been something that has been consistent. And it's being reflected in a slightly lower proportion of homes being resold at a profit, or units being resold as a profit. It is lower compared to houses, and it isn't one of the stronger markets out of all of our major capital cities, which I think is quite unusual normally for Sydney. When you've got, other cities where you've got the vast majority of homes being resold at a profit. The change that we've seen in profit margins, as you mentioned, $216,000 is the median profit on a unit in Sydney. That's only 3% higher than that dollar gain of this time last year. So really demonstrates that softer price cycle that we've seen for units. Whereas other markets have seen, Adelaide is 21% higher year on year, Brisbane 53% almost, Perth 51%. Very different performance depending on the capital city.
Yeah, and just to round us off, we should look at Melbourne and Darwin, because there's different stories being told there. Darwin came out at 72%. So what can you tell us?
So yeah, we've got 72% of units being resold at a profit. Darwin has really only started to more accelerate in price growth in kind of the recent, over the latter half of 2025. I do wonder whether it's a tenure aspect as well in Darwin. I wonder whether what we've got going on is different lengths of ownership being captured in these figures as well. And even when you look at Melbourne, we've got 75% of units being resold at a profit. That profit margin is $122,000. That's actually lower than what we saw this time last year. So again, shows that units in Melbourne just haven't performed relative to other capital cities. Melbourne is that case in point where we have seen investors shy away from that market, and Melbourne overall has been much better at providing units and higher density living.
All right, Nicola, we'll leave it there. Sounds like a lot of information in this report. Once again, thanks for coming on to the Real Estate Breakfast this morning. Appreciate it.
Thanks for having me.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week.
It's very difficult to save your way to wealth and save faster than how fast the properties grow, particularly in Geelong at this point in time. So I found a lot of clients where they want to just wait another 6 months to a year to continue saving up. But what they don't understand is that the property market continues to move away from under their feet. So at the time when they've finally saved that money for their deposit, they actually can borrow less and the house is worth more.
And that is adding fuel to the demand when you can buy, as I say, that price point around $500,000 and achieve roughly $450 a week in rent. There's big appetite for this.
Yeah, we're finding a lot of investors seeing great value in Victoria, and particularly the regional areas such as Geelong. And some of these blocks are actually quite large in land size, so you've got the ability to add value through granny flats or construction of secondary dwellings. A lot of investors are looking for yield and that affordability play to get into the market.
We connect you to the best real estate information across Australia. The Real Estate Podcast.